This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices just a little bit better this morning. Looks like this market is very well taking the news that pending home sales showing a 0.8% decline when a small increase had been expected. So once again, we are seeing a pattern of futures ignoring bearish news. Earlier, we did have the GDP report coming in a little bit on the weak side, up 2.6%. I guess it was up 2.7%, but this was somewhat offset by personal consumption that was higher than anticipated. Overall, this market, I believe, is headed higher. I think that even with the Fed reducing the quantitative easing, that there is still enough accommodation in the banking system to sustain the bull market. So from here, I would look for higher prices today and higher prices longer term. Over in the foreign currencies, seeing a little pressure in the euro currency. There's more talk that the European Central Bank could embark on a quantitative easing program, which would push interest rates in the eurozone lower, which in turn would, in theory, put pressure on the euro currency. However, I think overall the euro currency will hold up relatively well. But the best performer today is the British pound, which is higher, with UK retail sales coming in much stronger than expected. In fact, 3 times better than the estimate. So the pound looks like it can continue to advance longer term. Also seeing some follow-through gains from yesterday in the Australian dollar. This after yesterday the Reserve Bank of Australia governor having bullish things to say about Australia's economy. And the dollar index, a little bit better, but very much not able to penetrate the 80, 50, 80, 75 level in the June U.S. dollar index. Continue to believe that longer term the dollar is likely to head lower. Interest rate markets holding up very well. We are seeing futures a little bit higher. Some of the strength linked to the pending home sales coming in, as we mentioned, weaker than expected, in fact showing a decline when a small increase had been anticipated. Also, this is very much the minority view that treasuries are likely to head higher. We also believe that this bull market will be led by the long end, so the 30-year should continue to gain on the 10-year notes. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.